I'm Grant Walker. Welcome to Heads Up for Thursday the 21st of May, and I'll be back with the last call for you today at 4. To the banking sector, 5 global banks have agreed to pay US $5.7 billion in combined fines for charges including manipulating the foreign exchange market. 4 of the banks, JP Morgan, Barclays, Citigroup and RBS, which is the Royal Bank of Scotland, have agreed to plead guilty to US criminal charges. The 5th, UBS, will plead guilty to rigging LIBOR benchmark interest rates. Barclays was fined the most, US $2.4 billion, as it did not join other banks in November to settle investigations by UK, US and Swiss regulators. Barclays is also sacking 8 employees involved in the scheme. US Attorney General Loretta Lynch says almost every day for 5 years from 2007, currency traders used a private electronic chat room to manipulate exchange rates in the US $500 million a day market for dollars and euros. She says their actions harmed countless consumers, investors and institutions around the world. Separately, the US Federal Reserve fined a 6th bank, Bank of America, $205 million over foreign exchange rigging. All the other banks were fined by both the Department of Justice and the Federal Reserve. Regulators say that between 2008 and 2012, several traders formed a cartel and used chat rooms to manipulate prices in their favour. Several strategies were used to manipulate prices, and a common scheme was to influence prices around the daily fixing of currency levels. A daily exchange rate fix is held to help businesses and investors value their multi-currency assets and liabilities. Until February, this happened every day in the 30 seconds before and after 4 o'clock in London, and the result is known as the 4 p.m. fix. In the scheme known as building ammo, a single trader would amass a large position in a currency and just before or during the fix would exit that position. Other members of the cartel would be aware of the plan and would be able to profit. The fines break a number of records. The criminal fines of more than US $2.5 billion are the largest set of antitrust fines obtained by the US Department of Justice. The £284 million fine imposed on Barclays by the UK Financial Conduct Authority is a record by the regulator. To the latest poll results, it seems former ACT MP and National Cabinet Minister John Banks has NBR member subscribers on his side. The angry Mr Banks used an NBR radio interview yesterday to hit out at the Solicitor General and also QC Paul Dacre following his acquittal earlier this week. The Court of Appeal had ruled that during Mr Banks' case, Crown Law withheld a memorandum which had the effect of misleading the court. Mr Banks says it's outrageous that the politically appointed Solicitor General was calling the shots against him as an MP and said the Australian approach of an independent prosecution service should be adopted. In a special NBR radio panel, Victoria University legal ethics lecturer Gary Forrester said Crown Law's behaviour was a serious matter and a very bad look. Otago University Professor Andrew Geddes said on the panel that Attorney General Chris Finlayson will be very unhappy and there will be nervousness within Crown Law because misleading the court is just about as bad as it gets. He says when you get into trials, they become a little bit like warfare. A fog of war envelops people and they start making decisions in the heat of trial, which really they shouldn't, because it gets so adversarial. Mr Geddes says Crown Law might have lost sight of its greater responsibility to the court and it could have become a bit of, God damn it, we're just not going to lose this one. Member subscribers were asked whether the Court of Appeal's decision has completely exonerated Mr Banks or if he'd been let off on a technicality. Mr Banks' view is that he's been completely vindicated. Member subscribers tend to agree, with 58% of participants in a poll saying he has been exonerated and the Solicitor General should now be held to account. Of those participating, 42 said no, he's merely been let off on a technicality. To market news, Raycon shareholders will be eagerly awaiting tomorrow's annual results announcement after management promised the high-tech components manufacturer will be profitable this time around. The Auckland-based maker of quartz products and crystal components for GPS and telecommunications equipment, founded by director Warren Robinson in 1967 and listed in 2006, has suffered an earnings nosedive in recent years. However, Chairman Brian Mogridge assured disgruntled shareholders at its annual meeting last September the company would return to profitability by the end of the 2015 financial year. Raycon is forecasting underlying earnings before interest, tax, depreciation and amortisation of $10 to $15 million in the 12 months ending March 31st, 2015. First half results in the 6 months ending September 30 showed underlying EBITDA of $4.3 million, compared to an underlying loss of $4.7 million a year earlier. It reported a first-half net loss of $3.4 million on revenue that fell 24%, although it narrowed its $45.7 million loss a year earlier. But Rakon expected higher profitability in the second half of the financial year to come from its telecommunications unit and its space and defence segment. Shareholders will be interested to hear how a number of strategic moves are working for the company. Rakon undertook a significant structural realignment over the past 18 months, including exiting the small-margin smart wireless device market to focus on the telecommunications sector and shifting manufacturing from UK and France to New Zealand and India. Although this meant more than 210 staff were either made redundant or not re-employed at a cost of $7.2 million, Rakon estimates this will save $12 million in operating expenses in 2015 and will position it to return to profit in time for second half results. Last December, it announced it's sold its Lincoln UK plant for £900,000, most of which will go towards repaying debt. Rakon focused on reducing its bank borrowings as part of its restructure and had net debt of $8.2 million as at September 30, down from $27.1 million a year earlier. The company received a profile boost last November after the Rosetta spacecraft, to which Rakon supplied crystal filters and oscillators, completed its 10-year, 1.6 billion kilometre journey to land on a 4-kilometre wide comet. Rakon's share price is at 35 cents today, having increased 1.4% since the start of the year and 67% over the past 12 months, largely on the announcement a return to profit was imminent.
NBR Radio with Bayleys, New Zealand's leading commercial real estate company.
Budget time used to be for filling up the car, buying stockpiles of cigarettes and getting an extra crate of beer. Those days are over, and new taxes are no longer passed by urgency in Parliament. In his Editor's Insight on Wednesday, Neville Gibson looks at the future for oil prices. Neville, petrol prices seem to be on the way up again. Would that be right?
They are, but there are occasional drops, and there's been discounting ahead of weekends. You can get it on Thursday, but it's still a highly competitive and price-sensitive market. Now, the total tax on petrol is around about 40% of the pump price, and that's around about $2 for standard, according to AA's Petrol Watch, which you can track things there. And politically, there's always a bit of agitation about petrol prices. People are calling for inquiries, but these are focused on the smallest component of the petrol price. That's the oil companies' retailers' margins. But not surprisingly, if any inquiry is held, and one was recently sponsored by Z Energy, these show there are no excessive profits being made, and the AA seems to agree. But unfortunately, the big drop in petrol prices, which has underlined deflationary pressures in the economies all around the world, looks like being far from being in the normal situation.
Right. So what are the pundits saying about future prices?
Well, petrol prices have actually come up about 40% since their lows earlier this year, and the forecasts show rather a mixed outlook, but it's one that increasingly looks a bit like a W, and we're about halfway through. We're at the middle tip when prices could drop substantially again before rising. Now, if you look at the futures trading in America, and they go through to July at the moment, you're looking at around $65 a barrel. That's in the Brent crude, and US prices tend to be a little bit lower than that.
Does everyone agree about the future direction of prices, though?
Well, a column in the Wall Street Journal has been surveying some analysts' forecasts, and they point to an average of $63 a barrel for crude going through to September. So that means the prices are coming down a bit. But in that range of economists, you had Bank of America Merrill Lynch saying they could be below $60 for the rest of the year. And other banks, Standard Chartered being one of them, they say there could be a rebound up to as high as $90 by the end of the year. But a lot of this is contingent on the slowing oil boom in the US. As the price goes up, shale oil production goes down. But the general consensus is that the global market is still oversupplied, and in Russia and Saudi Arabia, who are highly dependent on oil revenues, they've both cranked up production, and it's now at its highest, historically speaking.
The impact of shale oil reserves in the US has had a big impact on price, but is that continuing?
Well, it certainly has had quite a bit. You hear about oil drilling rig numbers, that sort of thing. But when oil gets to about $70 a barrel, which it nearly did just recently, the producers have an incentive to bring back a lot of supply. It's actually quite an expensive form of oil production, although it led to that big drop from well over $100 that we saw last year. Now, the forecasters say that the price next year could be even lower, so they are looking a bit further forward. But of course, that's a pretty murky set of predictions there. But summarised, we could say that fewer are expecting a strong recovery in prices, and that production is well able to meet the demand, and that demand goes up in the second half of the year, which maybe, who knows? I'm not going to make any firm prediction here.
Right. Now, and finally, to just broaden the discussion out a bit, the IMF has produced a report on the true costs of fossil fuel. Is this likely to have an impact on prices?
Well, this report has landed a bit like a bomb in the middle of all this. The report's authors describe their report as shocking. It's a bit of an understatement, because they say that consumers of all energy, and we're talking about fossil fuels here, not just oil but coal and that sort of thing, for use in electricity and transportation, they are saying that consumers around the world are paying, that are being subsidised for the true costs of all this to the tune of $5.3 trillion a year. Now, it points a finger at the use of coal in China and India, and it says these costs are mainly aimed at poor air quality, pollution of land and water, and the impact on health. In fact, the authors of this report say that this 5.3 trillion exceeds the total spent around the world on healthcare.
Neville, thanks very much for your editor's insight today.
NBR Radio with Hotel de Brett, your home away from home, but with better service. NBR Radio.
In construction news, a new Manson's high-rise tower for the NZME site in central Auckland will contribute to rising office vacancy levels. Recent agency research suggests a rise in prime-grade office vacancies as several new high-rises come on stream in central Auckland. Until recent weeks, the vacancy level among top Auckland offices was less than 2%, but has ticked up as more new spaces become available. LJJ Research says the vacancy rate will rise to 4.9% as new Wynyard Quarter offices are built. The JLL research was carried out before the Manson's announcement. The Manson's planned development at 1 Mills Lane will be about 190 metres high and include 30 levels for up to 4,000 office workers, with shops on the ground floor and a garden penthouse for viewing. Manson's hopes to obtain resource consent by October. Meanwhile, JLL's research notes the high level of vacancies in older buildings as high as 20%. To the media, APN News and Media has started a single newsroom concept for its NZME unit in New Zealand, similar to Die Welt's one in Germany, saying an integrated sales proposition is helping it win market share, including 20% of the nation's online revenue market. The media company's strategy to transform its businesses is laid out in an Investor Day presentation that reiterates what it told shareholders at their annual meeting last month. APN's year-to-date sales are 6% ahead of the year earlier, including the contribution from Perth's 96 FM. Earnings before interest, tax, depreciation and amortisation are ahead, and net profit is broadly in the same as this time 2014. NZME's strategy is to think about content across all platforms as being either news, sport or entertainment. NZME publishes the New Zealand Herald. A suite of other newspapers owns radio stations including Newstalk ZB and consumer sites such as Grab One Daily Deal site. Paywalls would help convert its audience into registered users who would be offered member benefits in exchange for their data, the presentation says. Monetising the audience would include memberships, subscriptions, pay-per-view and personalised content. The first of these initiatives is a paywall for its Queensland daily regional newspapers, which will be launched in the second half of this year. In a similar fashion to the New York Times, readers will have access to a limited number of articles each month before being required to pay. The news comes as the publisher announces plans for the New Zealand Herald to implement an online paywall later this year. The company said revenue from NZME is tracking 2% ahead of the same time in 2014 on a like-for-like and constant currency basis. That excludes $3 million of magazine revenue excluded from last year. NZME's digital revenue is up more than 50% year-to-date, and online revenue market share has risen to 20% from 16%. The company expects to have co-located its 3 NZME businesses by February 2016, which will enable the full benefits of integration to be realised. APN Chief Executive Michael Miller said in a statement, NZME is increasing market share by transitioning from selling products to selling its expanded audiences via an integrated sales proposition. The low crossover of customers in 3 businesses is providing revenue growth opportunities. Separately, APN's AdShell unit, which isn't part of NZME, said it will begin digitising 35 of its billboard locations in Auckland as part of a broader plan to install 150 digital panels in Auckland, Wellington and Christchurch in the next 12 months. APN shares fell 1.7% to 89.5 Australian cents on the ASX and have gained 31% in the past 12 months. In business news, Cavalier Corporation's managing director has quit in the wake of the carpet maker's 6th successive profit downgrade. Cavalier is now warning investors to expect a normalised annual profit at or below $1 million, down from the previous guidance of between $1 and $4 million. But the bottom line will be a loss after further asset write-downs compared with a net profit of $5.8 million in the year ended June 2014. It's the 3rd time the carpet maker has downgraded its annual forecast for the current year after 3 downgrades last year. Colin McKenzie has stepped down from the top job and will be replaced temporarily by Chief Financial Officer Paul Alston. The company says earnings from its Australian broadloom carpet operations have been hurt by the strength of the New Zealand dollar against the Australian dollar since the beginning of this year. Cavalier says its transition plan for its Onterra tile business of supplementing its manufacturing with substantial imports has been slow to materialise and is only now starting to gain traction. It says the board has prepared an updated strategy and business plan, which has been reviewed by a specialist team from accounting firm Deloitte and which projects improved profitability in the year ending June 2016, as well as a substantial reduction in bank debt. The company expects to return to adequate levels of profitability by the year ending June 2017 by focusing on its core businesses. It says its bank is fully aware of these projections. As at 31st December, Cavalier's debt-to-equity ratio stood at 39%. Net debt stood at $59 million.
NBR Radio. With Clooney Restaurant, an unparalleled private dining room choice. NBR Radio.
I'm Grant Walker with Heads Up. Here's what's trending on NBR Online. Zespri doubles profit. Your thoughts on John Banks' acquittal? 5 world banks face record fines for currency manipulation. And Westland Dairy sets up Chinese marketing arm. If you're travelling today, Auckland the odd shower but rain tonight. Wellington wet and windy. Christchurch cloudy and Dunedin wet. For more details on those stories, go to nbr.co.nz or stay tuned. Those stories coming up next on NBR Radio. To the dairy industry, Hokitika-based Westland Milk Products has revealed this week that it has set up an office in China to market value-added products there. Speaking from Shanghai yesterday, Westland Milk Products General Manager China, Greg Waffelbacher, told NBR Radio he'd been there for a year setting out the office, employing locals and working with contacts. Mr. Waffelbacher says Westland Milk Products Shanghai expects to be selling products via the new company within the next 2 months to China, Hong Kong and Taiwan. He said, I've had a positive response from everyone here, from government down. We're showing a commitment to China long term. We're not just throwing product at the market from afar. Western Milk Products is the second biggest dairy company in New Zealand and produces several added value consumer products, including make-at-home yogurt Easio. Traditionally a seller of ingredients to other manufacturers or wholesalers, Western will venture into its second retail-ready product with its new UHT milk due to come on stream around April 2016. Western Shanghai will concentrate on marketing Westpro Nutrition infant and toddler nutrition ingredient powders, branded UHT milk and cream, West Gold consumer butter, Easio make-at-home yogurt, and Westpro milk powders, milk proteins and butter. Mr. Waffelbacher says the aim is to add more value to milk. The largest demand and highest value for the products is in China. As a wholly owned foreign entity, Westland Shanghai will have its own board of directors and a separate finance function within Westland Group. He says finding the office space was pretty easy, but setting up a company in China takes time. He said, we started in April 2014 with 1 employee and today have 10, with more coming on board as our business grows. It's essential to have people on the ground representing Westland in China. All the staff have been recruited locally, with Mr. Wafelbacher the only expatriate in the office. The bustle of Shanghai is a far cry from Mr. Wafelbacher's home on a dairy farm in the sparsely populated West Coast's Waitaha Valley. Before joining Westland, he worked in New Zealand, the US, Singapore, Thailand and Germany, but most of the time in Asia. He says building networks is critical and best achieved by having a team of Chinese nationals. He says New Zealand has a strong reputation in China and won points for its transparency over the various issues that have arisen recently over exported products. China is undergoing big change all the time and is proving stimulating as well as challenging, Mr. Wafelbacher says. He's taking weekly language lessons and gradually picking up the dialogue. While you were sleeping, stocks on Wall Street rose after US Federal Reserve minutes for April showed interest rates weren't likely to be raised by June. Officials believed temporary factors were holding back the economy, though they were confident unemployment would keep falling and inflation would gradually start increasing. The US dollar strengthened against the euro while gold and oil rose. The Dow Jones Industrial Average rose 15 points or 0.1% to 18,328 after reaching another high on Tuesday. The S&P 500 rose 0.2%, the Nasdaq gained 0.3%. Stocks in Europe were muted, with Germany's DAX falling less than 0.1%, while France's CAC 40 added 0.3%. In London, the FTSE 100 closed 0.38% higher. In Asia, Tokyo stocks finished at a 15-year high after data showed Japan's economy grew at its fastest pace in a year during the first quarter. Shares elsewhere in the region fluctuated modestly. The Hang Seng Index in Hong Kong and Australia's S&P ASX 200 were roughly flat. In a business update, several early shareholders in the healthcare company TruScreen sold down their holdings within days of the company listing last November, trading records show. TruScreen, a marketer of cancer screening technology acquired from defunct Australian company Polytechnics, announced a capital raising on Wednesday to fund growth plans in Asia. The scheme aims to raise 3 to 4 million from share issues through a private placement and a share purchase plan. The company also raised 6.5 million from private investors at 10 cents a share before its listing, among them former Telecom Chief Executive Teresa Gatting, property investor Chris Francis, Unison Networks Director Brendan Hall and former stockbroker Brett Wilkinson. On its November 12 NZAX debut, TruScreen shares opened at 16 cents amid a flurry of trading, offering early investors a stag opportunity. Share trading records show Mr. Francis began selling stock on November 14 and over the next month sold about 500,000 shares, about half of his holding. Ms. Gatting began selling on November 17 and also sold 500,000 shares, about 40% of her holding. On April 30, TruScreen announced it had received approval from China's Food and Drug Administration to market its cervical cancer screening product there. TruScreen Chief Executive Martin Dillon described the development as a very significant commercial opportunity for the company. In a spike in trading volumes after the announcement, there were further sales from early shareholders. Between May 1 and 8, Mr. Hall sold down about 500,000 shares in a series of trades, the smallest comprising just 27 shares. Mr. Wilkinson was also a seller, offloading about 100,000 shares of his initial 650,000 holding that week in trades as small as 15 shares. One experienced market source said it would be not unusual for pre-listing investors to sell down. He said, I'd say it's not abnormal. If it's just an individual who provided IPO capital, it's certainly not unusual for them to want to take out some of their holding. A TruScreen investor who asked not to be named said he had confidence in the company and would participate in the capital raising. He said, if I didn't believe in this, I could have sold all my shares a week ago. The market's been there to clean out.
You're listening to NBR Radio. Upgrade to My NBR Radio with a smartphone-only subscription to NBR Online today for free and receive unlimited access to NBR Online on your smartphone until August 31st. Visit www.nbr.co.nz/free.
NBR Radio, Wednesday the 20th. I'm John Stewart. I'm joined by Nathan Smith with his weekly Foreign Affairs Scope. And today, Nathan, I think we go first to the Middle East to talk Iraq and ISIS, and in particular the fall of Ramadi, a pretty strategic town.
Yeah, this is once again back in the Middle East. Yes, this is the centre of gravity at the moment for international relations. The partial fall of Ramadi. There are places now in that large city in the Anbar province that ISIS completely holds on its own. Shiite militias have been called in by Baghdad to reinforce soldiers. I believe 500 or so were killed over the past couple of days by a wave of VBID attacks and other suicide bombings before a massive counterattack happened with ISIS. So big fall, probably as large as Mosul a couple of months ago. But it just shows that once Tikrit falls to the central government, ISIS can then turn around and very publicly say, we're going to take another of your cities and there's nothing you can do to stop us. So this is just a tit for tat. There's a lot of narrative being pronounced over the airwaves at the moment about what this means and who's really in control of these sorts of places. Nevertheless, a town is now under control of ISIS that is very close to Baghdad.
Indeed, only just over 100 k's away, I think. Just while we're still on the Middle East, how effective are these Shiite militias?
The problem is not necessarily in their effectiveness. They are fighting for some of their core neighbourhoods, so they're tenacious. It's the fact that they are Shiite and they are fighting in Sunni areas, which is, from Baghdad's perspective, is exactly what they need. But from the rest of Iraq's cohesion and the long-term perspective, it doesn't really help. They haven't sorted out their issues, so to speak.
Now let's go to Russia and the Ukraine, and the US seems to be changing its tactics. In what way?
The US is now wishing to get a little bit more directly involved with some of the negotiations around the eastern parts of Ukraine and exactly what the status will be moving into the future. NATO has been involved in ways, but it's generally lent on Germany and France to do most of the negotiating. But it appears that a direct US hand is now needed as the pressure ramps up on Putin to come to some sort of conclusion about what he wants with this particular region. So we had a few high-level visits. Kerry was there recently, the Secretary of State, and also I can't remember her name, but a high-level diplomat in Europe also visited Putin recently. So, there's the US, I think, is realizing that it has a lot of pressure it can bring to bear on Russia, and this will just be an indicator of who's in control.
What sort of pressure, Nathan?
Well, currently, there's a lot of sanctions on Russia, but Russia is also moving into another recession. The oil prices are very low. Putin's still quite popular, but nevertheless, he, I think, feels a lot of pressure at home as well. And the US really don't have to put a lot of materiel or diplomatic resources into play on this, and they're in a much better position. And everything they do hurts Russia quite disproportionately.
Now let's go to Burundi in Africa, and there's some pretty disturbing unrest there. Just what's happening, Nathan?
A couple of days ago, it seems to have petered out, but there was an attempted coup. It seems to have come on the back of constitutional amendments by the president there, who tried to go for a third term or a second term. It's not quite clear what he exactly wanted, but he thought he had some constitutional authority to do that. The military didn't believe that was the case. The parliament also didn't believe that was the case, and there was some unrest. The problem, though, with that, which is why there's a lot of international diplomatic attention on this, is that back in 1994 there was a massive ethnic clash there with the Hutus and the Tutsis. But around the same time as what happened in Rwanda, most people assume that it was a Rwandan thing. It was actually a little bit larger than that. So there is potential for this to devolve heavily and quickly into ethnic potential genocide. So that's why people are noticing this and bringing this to the world attention.
Now to Yemen, which is heating up again. What's happening there?
The 5-day ceasefire is closed. Not much changed, really, but talks have begun. Problem is that the Houthis are not invited to this. They don't really respect the idea that the talks are being held in Saudi Arabia, as if Saudi Arabia has anything to do with Yemen in their minds. So they are completely not interested in talking amongst this particular framework. But it does leave them out in the cold necessarily. And therefore, since the ceasefire has ended, Saudi Arabia has restarted its airstrikes. Essentially, nothing changed over the week, and there are still positions that the Yemen needs to loosen up, and the Saudis are going to be doing this for them.
So still the bloodshed continues, and the poor old civilians are the ones who are suffering.
Yeah, that's right.
Yeah. Well, thanks very much for your Foreign Affairs Scope this week, Nathan.
NBR Radio. With the Property Press. It's out now to show you around.
In business news, Coca-Cola Amatil is targeting a return to mid-single-digit growth in earnings a share over the next few years, with no further decline expected after 2014. Earnings should stabilise in 2015, Chief Executive Alison Watkins told shareholders at last week's annual meeting. This follows a 25.3% slide in full-year profit last year to 375.5 million Australian, the worst result in more than 2 decades. Ms Watkins reconfirmed guidance given in October when she presented her strategic plan to investors. But she warned the pace of that recovery would rest on new revenue initiatives such as Coke Life and economic conditions in Indonesia, where the company has a controlling stake in the local Coca-Cola bottler. CCA faces a potential price squeeze from major supermarket chains Woolworths and Coles in Australia, as both have pledged cheaper prices to retain market share. Ms Watkins wouldn't comment on that, but said CCA would continue to watch its own costs, stripping out $100 million in savings over the next few years. She says the focus of our cost cutting is very much on back office support areas, rationalising excess capacity in our system, and we're actually investing more in innovation in our brands. We're equipping our sales force with the latest productivity. Last month, Lion warned it would not swallow lower prices as part of any renewed price war between Woolworths and Coles unless it was guaranteed greater shelf space for its brands and a lift in sales at the checkout. Ms Watkins says both chains have been supportive of its new brand Coke Life, which has the potential to grab as much as 2% of total Coke volumes in Australia after already capturing a 13% share of the sugar cola segment. Coke Life is already the company's second most bought pack in the 1.25 litre and 250ml sizes. More than 3.5% of supermarket shoppers have now tasted the low-sugar drink. In business news, Christchurch-based software company Jade Software Corporation is focusing on long-term gains as it takes the short-term pain of a further loss in the year to December. Jade, one of the oldest software companies in New Zealand, profited from its spin-out of crime-fighting subsidiary Wynyard Group in 2013, but has otherwise accepted years of red ink in pursuit of growth overseas. Its latest results show a loss of $1.1 million, an improvement on the previous year's loss of $7.7 million, not counting a gain from the sale of Wynyard. Revenue grew 13% to $30 million. Managing Director David Lindsay says 2014 was a really good year for us in terms of progressing towards our goal. We did make a loss, he says, and it's important that we do acknowledge we're still a loss-making company, and we've still got really supportive shareholders that are allowing us to do that and keep investing in the business. Jade did not break out of its divisional performance, but Mr. Lindsay says its logistics business was a big contributor to the revenue growth. The logistics unit develops and installs software to help ports manage their cargo handling. Mr. Lindsay says it had a stunning year with 56% growth and 29 new freight terminal customers in Central America, Africa, Europe and the Middle East. He says we're looking for that demand to continue this year. Jade operates 2 other divisions, Solutions and Technology, which provide software products and services to corporate customers. Mr. Lindsay says that after the sale of Wynyard, the company is continuing to invest in product development, and an internal program dubbed the Thinkubator is helping to capture ideas from its 212 staff. One new product aimed at the wealth management industry is being tested by a customer in Sydney, according to Mr. Lindsay. The system offers portfolio management and personal finance advice through a smartphone, including the ability to transact directly. Jade is 56% owned by Skipton Building Society in the UK, a long-term customer, and 26% by USA Health Investors, a limited liability company based in Atlanta, Georgia. Let's go to Queenstown. Race car and entertainment entrepreneur Tony Quinn is developing a new racing entertainment facility at Remarkables Park near Queenstown Airport. The $7 million electric go-kart circuit incorporating tunnels and ramps is due to open on June 20. He says it's similar to his indoor go-kart business called Game Over on Australia's Gold Coast, south of Brisbane. Mr. Quinn says they're a good wee business, easy to operate and a good return on investment. I'm also looking, he said, in Auckland, Sydney and Melbourne for the right spot. For others, we'll get there. Mr Quinn's go-kart building is one of several new attractions either under construction or planned for the Remarkables Park Retail and Business Centre in Queenstown. Remarkables Park developer Alistair Porter says he has another 10 operators lined up to provide golf simulators, snowboarding and the like. Mr Porter says the first 3 buildings in the $50 million recreation precinct are being developed by Invercargill accountant James Hennessy via his Willow Family Trust. The first 3,000 square metre building in Hawthorne Drive will be used by Dunedin firm Chipmunks for a climbing centre, indoor snowboard ramp, trampoline centre and 3D golf simulator and boutique gym, similar to its facilities in Australia. Other possible operations include a cinema and indoor skydiving facility. They will complement a proposed convention centre for which Porter Group is seeking resource consent. The privately funded convention centre would be an alternative to one proposed by the Queenstown Lakes District Council in the centre of town. Porter Group says it will seek a judicial review over who should be rated for the council convention centre if it comes to pass. Several other property developments are also underway in Queenstown. They include the retail and commercial development at 5 Mile next to the airport and at nearby Glenda Drive. Queenstown enjoyed some of the busiest real estate sales outside Auckland last month, with more than 60 million of sales, the highest level since January 2006. The sales include a building housing 3 apartments in central Queenstown, which sold for $7 million. The median house price increased to $670,000 in April 2015, which is over 20% up on April 2014.
NBR
Radio.
Free to air online. NBR, the meeting place of intelligent business.